Hello, everyone, and welcome to a very special virtual version of the Residential Market Growth webinar series. We're covering the 2018 summer update. I say this is special and virtual because for those of you guys who tried to attend the live version of this webinar last week, you know how this ended. We had massive audio issues and we could not continue into the rest of the program. So we're recording this. It's just myself today, Simon Hune from Hanley Wood, also Metro Study. My usual colleague, Rob Colton, could not attend the recording seminar, the session. So I'll be soloing it today. Also, obviously, we won't be able to take Q&A at the end, so I want you guys to make use of any of the email addresses you see on the screen right now and contact us if I mention something that you want a little bit more explanation around, or if you have other questions about how to use the various points of data and reports that I'll be talking about today. As usual, the site that you will need access to in order to get your hands on all the reports and the different resources is residentialmarketgrowth.com. When you're there, you'll also see recordings of past webinars, as well as an FAQ section and a little survey for those of you in the propane industry to take to give us feedback on what you'd like to see in future versions of the reporting and the rest of the program. Brief announcements, and then we'll use the usual format for these webinars, and that's to start with the National Economic and Housing Overview. Before we talk about propane-specific points of interest in the market, we want to cover off on just how the economy and the housing industry is doing as a whole. Then we'll take a look specifically at the Roanoke, Virginia market and the Columbia, South Carolina market in this episode. I felt like we were really focusing on the top markets in the previous webinars, so we thought we'd go a little bit downscale and look at some upper and mid-tier markets like these, just to give you guys a sense of what's happening and where to find opportunity in markets other than, you know, Austin or San Francisco or, you know, Miami. Okay, announcements. So we are still working with the Q4 2017 data. That was the last input from the data side. But the next one's right around the corner. So by the time we meet next, we will be talking about the Q1 to Q2 2018 data. That update should complete in September. So you should expect an invitation to attend a webinar around that time, probably the middle of the month. I mentioned that previous webinars are all on the residentialmarketgrowth.com site. So if you are late to joining us within the program, then check out some of the other markets that we've covered so far. If you missed the last webinar, you missed a big piece of information, and that was that the target consumer groups have changed. I'll recap that in a second, but the original three are no longer the same three. We are looking at new top three segments for consumers when we talk about people who are more likely to choose propane in their homes. So give me one sec to get to that slide, but that was a big piece that you missed. You may want to check out that webinar if you're on the site and get, you know, and you can hear me talk about it in more detail than I'm about to, but I'll go through the top points right now so that we can move into the rest of the webinar. Advertising templates have also been changed. So the templates that are on the site that you guys are all free to use were originally corresponding to the original set of consumer targets. And since those targets have changed, we refreshed those templates too. Okay. So here's what I referenced, the changing of the makeup of the top three segments. This is in every one of the reports. any one of them, towards the beginning of the report, you should see this table. And it's not something that I usually talk about because we're so focused on just the three on the left. We used to be focused on those three on the left. But the ones that we don't focus on, the groups on the right, with sort of the cooler scores, the blue scores, active adult elite, active adult entry level, family life, these guys, we don't normally look at them because we don't consider them to be in market for propane. And so we don't really talk about the entire landscape. So this would be if you were to categorize all, 110 million households in the U.S. by shared trades. How would you arrive at that? And the model that we used at Metro Study in Hanley Wood is this sort of 9-person, 9-profile model, of which, as I mentioned originally, these three were thought to be the most important: simple life, entry level, and transitional. And we think they're the most important because they score the highest on these criteria, right? So remember, an index score is sort of a numerical figure that sort of predicts the likelihood of somebody in that group to be favorable in the direction of the service or the product that you're offering, right? So distance index, to cut to it, is how likely they are to live in a home that is far away from natural gas, right? So a higher number means that they're more likely to live away from natural gas, which means they're more likely to be a propane customer, and so on and so forth. The propane index is a good one to use as a shorthand. That's about the likelihood that they have propane in the home already, how favorable they are towards gas as an energy type, and so forth. So these three were the original three target segments. And what we originally thought when we first came up with the targets, back in 2016, 17, was that family life was, not a likely target because they didn't show those favorable characteristics about, regarding distance and, likelihood to prefer propane and so forth. What we started seeing, however, over time was that we gradually saw a shift in the original scoring. And as of the last quarter, those shifts sort of tipped over to such a degree that we thought, okay, we need to revisit the target groups. And instead of the three on the left, we're going to start to incorporate family life. Here's how we saw the numbers changing. And they're always changing, but we saw them change more dramatically with the last update. And this is what I'm getting at. Simple life went pretty much into the blue, and became disfavorable, both in terms of attitudes and preference for propane appliances, but also where they lived and access to natural gas. Whereas family life jumped up quite a bit. So we are no longer including simple life in our formulation of the top three segments. We are now considering these three to be the top. What happens? So what happens in the world to make these numbers change? What happens to, where people live and how they buy and the kind of families and the jobs that they hold? What happens to, the numbers reflect these behaviors? There are a lot of things, right? So the first thing, as you know, is that the natural gas, infrastructure availability map is changing. Right, and so where homes were built before, where natural gas was not, they may now be on that infrastructure. This is a nationalized scoring, just to remind you guys. So the top markets that feed these numbers are always shifting. So that's another, point where the changes are manifesting in the numbers you see. Right, so a top market that was very heavily favored towards propane may no longer be a top market, right? And so the average that fed into these numbers, plays out differently. Simple life folks may have moved on to areas with, access to natural gas. They may have become sort of more urban dwellers than they were in the past. Attitudes about gas and electric appliances may change. I bet that's sort of a smaller variable at play here, but it does happen. And all these sort of major points were the biggest factor in pushing simple life out of consideration for the propane industry, whereas family life is now. And it's kind of difficult to pinpoint exactly how this is playing out because it is a national sample and there's so many variables at play. But the ones that I mentioned, I think we believe are the major contributors to the shift in the demographics. So just to categorize, simple life used to be those people who were averaging about 78,000 in annual household income. They tended to be sort of more family oriented and living in suburban areas as well as rural locations. They had a high interest in outdoor activities. And they tended to hold more blue collar jobs, especially in sort of mining and construction type of fields. So they're out, and the ones that are in are family life, and they are a little bit more affluent, significantly more affluent than simple life. They too, as their name would tell you, tend to be families. Most of them are married, 8%, and they're more highly educated. So in general, we like this trend for the propane industry. We like having people who have a little bit more income and education, sort of coming into play for the market as opposed to ones that maybe did not have as much access to resources and sort of, ability to invest in their home. Let's see. I'd love to hear from you guys if you have seen any shifts in the customers that you're seeing that bear this out, or if you're seeing a trend that goes against this. Let us know too. And I'd like to have a discussion about kind of how the data agrees or doesn't agree with your experiences, on the ground. All right, so let me try to speak on behalf of my colleague, Rob, who usually covers off on the economic and housing trends. National picture, so we always start with employment because there's always a strong correlation between home building and improvement and employment trends. As the most recent employment data shows here, we're in a pretty good place as far as job growth goes. This chart shows up to March 2018, but the June numbers were really favorable as well. Added about 130,000 jobs in June, and that totals up to about 2.4 million jobs over the last 12 months. So employment's been great. Conversely, unemployment rate has been very low. I don't have an unemployment chart in today's webinar, but you've seen it before. We were down all the way to 3.8, I believe, when we met last. That ticked up 0.2% to 4.0. That's the official unemployment rate as of June. But, it's a slight change, and I think the observation is still that it's a very flat employment market and a very healthy employment market. What's worth mentioning is how long and gradual this recovery has been, and how steady everything has been. Types of jobs. So it's not just about whether or not people have jobs. It's how good are the jobs that they're holding. That matters as well. That looks pretty good too. So 50,000 of the 130,000 jobs that were added in June, almost half, were in some sort of business service industry. So they're good jobs, high-paying jobs. It's much more favorable than if we saw that majority of those jobs or a big chunk of those jobs were more in sort of retail employment and so forth, where you wouldn't be making enough, especially in with home prices being what they are, to be able to purchase a new home or to invest in a home. There's also a strong correlation between employment and consumer confidence. The more the unemployment rate goes down, the stronger and the higher consumer confidence tends to go up, and that makes total sense. I mean, just think about the psychology of the average American, right? It's about how confident that they feel, about their income, how stable it will be. And depending on how you feel, and depending on whether you see that, your family members and your friends are keeping their jobs, getting promotions, or losing their jobs, that's going to affect how willing they are to make long-term financial investments such as, purchase of a home, or, the remodel of a home. Um, there was a recent Fannie Mae survey where, people asked if, people were asked if they felt that this was a good time to buy a home, and 23% said yes, that this was a good time to buy a home, and that's pretty good. And people were also asked about increase in home values, if they thought that the value of their home was increasing, and that was also up 8% over the previous survey, and the previous survey numbers was really high already. So, as you see in the red graph here, confidence is really high, and that has to do with the employment scene being very good. As far as new housing starts go, demand has been very steady and rising. The consumers that are in market are still creating strong demand that's strong enough that we'll see this slight upward trend continue into at least 2020. And this is a Hanley Wood / Metro Study projection. Post 2020, we all feel like it will probably flatten out and even decline after that. And that's not necessarily about sort of demand for housing. It's more about kind of the economic factors, the boost that we gave the economy as a result of tax cuts and so forth that were enacted, late last year, earlier part of this year. Those have expiration dates. And so the downward effect on the economy will start to play out on housing starts as well. So we're good for the next 2 years. It'll continue to flat out, and then probably by 2025 or so, you'll start to see things go the other way. I wanted to show you the national outlook from an annual starts and closings perspective. So again, this is new home purchases. We talk about the big three, markets being Texas, Florida, California all the time, and we tend to kind of, hold them with equal merit because it's the top three. Hey, and California, of course, is a huge market, but look how big Texas is compared to all the other markets in the union. Like the top three is not an equal top three. I mean, Texas is by far the biggest market in the country. The other thing I wanted you guys to see is just to spot where your market is. I mean, I live in Colorado, and we're always talking about how hot Colorado is, but in the grand scheme of things, it is nowhere near where Texas is. I mean, it looks to be about a quarter of the size of the Texas market from a starts and closings perspective. So, your local boom may not be the national boom, and your national boom may not be your local boom. Here's a quick look at the price of the homes that are being built and closed on. This is really favorable, right? Because we have been complaining a lot, and homeowners have been, in trouble, especially, first-time buyers, about the price of homes, that are available to them. And it looks like finally the larger national production builders are, trying to remedy that, right? So seeing this big of a bar for the, low-end home market, that's really great because it really is going to satisfy those consumers that are in market. It's not the biggest here, it's still that $300,000 and $400,000 home that makes up the majority of what's on the market. But it's good to see that this is catching up and is becoming available for those people who are facing that affordability problem. Okay, so just key takeaways from a macroeconomic and housing market perspective. Tax reform enacted recently, it continues to hurt the high price markets, right? Because those mortgage interest deductions are now capped at a lower rate, so you're not going to be sort of rewarded for purchasing those higher price homes and owning a higher price home. The national housing market will continue to be really undersupplied, which means that, home prices will remain high. And, we're well headed towards overvaluation. But at the same time, in the grand scheme of things, we're not in as bad a shape as we were in, say, the 2005, 2006, years. Because homes are so expensive and because the housing market is sort of broken in that regard, remodeling and renovation will continue to be really strong. So look for opportunities for propane replacements. Mortgage rates are going up because that's the only direction that they had to go, right? And so that will continue to be the case. And inflationary pressures correlatively will be building, and all of that will start to slow economic growth. And so overall, we're in what we would consider to be the sort of late inning of a very challenging, but still kind of opportunity-rich housing market cycle. And it's marked by an environment of undersupply and high costs. So it's later in the game. What happens after the ninth inning? Well, as you know, the cycle resets. So something significant, and then we'll be kind of back at it again and build up to another cycle. Here's how the national economy is breaking down in the residential propane context. So this is a list of the top markets ranked by that composite index score in the right column. Remember, that's one of the scores we use to compare different markets and different hotspots within markets. If you've been to our webinars before, you know what the score means. It's like the one score, the total average score. There were some slight movements up and down within the top 20 during this last period of reporting. But overall, the West Coast and Northeast markets are still highly represented and going strong. The Gulf Coast market saw a brief blip during the hurricanes, but they're falling off the radar. And it looks like besides Lake Charles, Louisiana at number 7, they've mostly fallen out of the top 20. The big movers I put in green for the ones that moved up. So Syracuse moved quite a ways up and broke into the top 10. Longview, Texas also made it all the way up from 32. And the downward moves were here. Houston finally took a dip after being at top 5 and number 3 at the last period, down below the top 10. All right, so let's get into our first local market close-up view, and this is Roanoke, Virginia. And starting again with the employment situation for Roanoke, again, because that drives the local market for housing and renovation. Unemployment is really great, 3.5 versus the national average of 3.8, so in a better situation than the rest of the country. So that's total employment. But look at the industries. This is where it starts to, the good news starts to get a little complicated and break down a bit. Because the top segments, the top industries are not really the kind where the jobs would be strong enough to give a push to the housing economy. Healthcare and social assistance, for instance, which is the top industry segment in Roanoke. That's not doctors. Wish it were. It's more like family services, rehab, daycare counts in here. So these are not six-figure jobs. So seeing that and as the number one spot as far as industry goes is it gives us reason to think from a macro perspective that Roanoke isn't going to be the strongest as far as purchase power for those homeowners go. And you see that playing out right here. The median household income, $50,000, which is well less than the Virginia average, which is about 67, and then even less than the national average of 57. Median home price also, by the same token, is going to be lower, right? About 100,000, almost 100,000 less than the rest of Virginia. So good value, I guess. If you're living there, you can get a lot of home for less, but it really speaks to kind of average ability of households to make major purchases, and the home prices kind of reflect that. Permit activity, so 471 single family, for the end of the year. It's not nothing, but it's small, and you can see that also playing out in the top builder list here, right? These are all custom builders, right? We don't see any real national builders making a move into Roanoke, and that's because they can see, as we can see here and on the previous slide, that people are not affluent enough often to buy. So they're not considering Roanoke to be a growth market. This is an all builders list. This isn't just builders who are building in propane red zones. I spotted those as well. So Offrollen and Hidden Valley, these are going to be in your reports for Roanoke as custom builders that are also active, number 1 and number 2, I believe, on that list in the propane areas of the MSA. Interesting point that Rob wanted me to convey to you guys is that Roanoke seems to be a growing retirement market. So he has a theory that people who would have normally moved down from sort of New England, New York, New Jersey, and gone to Florida, they figured, that maybe it's a little too far away from our grandchildren, so we'll go halvesies, right, and end up in Virginia. It's a fair theory. Mountains instead of beaches, and yeah, we saw a couple of places in local media and so forth where the sort of retirement, boomer customer was really being catered to. So that might be something that you keep in mind if you have Roanoke in your crosshairs as a market to enter or continue doing business in. All right, so let's look at the propane-specific scores for Roanoke, and here's what the reports are showing us. And remember, we always use 4 or 5 different top-line scores to evaluate a market for residential propane opportunity, and they all mean a little bit something different, so we want to look at them closely next to each other. The scores answer the kind of questions you'd ask, about a market, like, what kind of homes are there, what kind of people are there, and, how they feel about propane and so forth, right? So these are numerical answers to kind of general inquiry questions about the type of buyers that make up a market. And, the propane index score, which is always the first one we look at, the score for Roanoke is 120. And that is a little bit above average than the national score of 113. That's not nearly as high as other markets we've covered in this period of reporting. It got as high as 179 for Corpus Christi. But it is still average or a little bit above average. The propane index score, that's the aggregate score that reflects the distance from natural gas for that customer, the consumer's preference for gas appliances, and how much propane is already in the home, if any, right? So all those sort of 3 sub-scores roll up into the propane index score. The propane projected growth index, that's the measure of the pace of increase in the residential activity, retrofit activity that involves propane, and how we think it will grow or not grow within the next 3 years. 50 is always the national average for this score, and we're at the high end of the range. There are some 100s in the national numbers, but 81 is still pretty good. So there is some reason to think that the propane-specific situation will improve over the next 3 years. The next one, the propane demand index, That has to do with the kinds of consumers that are there. So it's essentially these three bars, and the more of these three kinds of people there are in the market, the higher this score will be. And notice again, family life here as opposed to simple life because we took simple life out. Total demand is the rest of the market. Total demand is, excuse me, total demand is the rest of the market, and this is the percentage of the three top segments in relation to that total demand. Sorry, I meant to clarify with that, but maybe that was just more confusing for you guys. All you need to know here is the more of these people there are, the higher the score will be. And for Roanoke, we're at a 62, which is above average. And then based on all those three factors, the composite index, that's the meta score, is an 88 for Roanoke versus a national average of 71. That puts it at a rank of 33 in the nation, 33 of 381 in the nation. So those are the market-wide scores for all of Roanoke. Where can we spot opportunity within the market, though, right? And so to always answer that question, look at the heat map and look at the zip tables that are always in every report. Nearly all the action, as far as I could tell, were in Craig and Bootatot counties. Bootatot's up here, Craig County here. Here's the town of Old Castle, which is in Craig County. And I easily saw that there were some propane customers there, just even on Google Street View, which is where I took this photo, right? Looks like a couple of 250s and a 1,000-gallon in the back. The top towns on the zip table are Fincastle and Troutville, number 1 and 2, which are very similar in disposition to that Old Castle Street View photo that I just showed you. They're small towns for sure, and that's going to be like that for all of Roanoke. You know, total households within that zip code, just about 2,000. You know, so 5,000 total households altogether. What I do like here are the higher incomes, right? Because that always to being sort of more likely to invest in homes and care about comfort and the kinds of things that you would want to talk about when talking about propane. Right. So versus that sort of Roanoke average, like 72,000, 71,000 median income, that's good. That's a good part of town. They don't show a strong current preference for propane applications. You know, that would be this score and this score. So that's a nut that you guys will have to crack if you're serious about doing something in the Roanoke area and going after the top two as far as the zip code table says. All right, so let's do a little hypothetical marketing using what we know. So the cream of the crop is about 1,000 total, right? That's adding up these guys. 1,000 out of a total of 5,000 households in those zip codes, and they're more likely to be transitional and family life people. Very few entry level there. Right, so that gives you a beginning point as far as how to craft your marketing is concerned, right? You can kind of imagine these kinds of buyers, and you can take these buyers out, and you can think about this when you're putting together your budget. So maybe you can do something, with a direct mail component, or something that would be a little bit more expensive than usual because you're dealing with fewer people. Median income in the zip table is for the area as a whole, right? So use the consumer profiles to adjust those mentally. What I mean is these guys may not be exactly making this, right? So for instance, family life, we have a reason to think would be at the higher end of the scale and transitional at the lower, right? So maybe family lifers are more in the sort of 90 to 100K plus median income, whereas the transitionals are going to be probably less than that 70-ish number. So make that adjustment in your head when you are doing your targeting and your creative development. That's a typical transitional customer there, and that's a typical family life. right? That's why I said that transitionals are probably at the lower end of this median income spectrum, whereas family life are higher, right? So this is the average. This is the low end of the average. This is the high end of the average. I found this ad online for a local marketer, and it's a very minimalist, simple ad. And, if you're trying to convert current propane users who are not your customers to buy from you, this is probably effective. I'm told by marketers that I've talked to in the industry that this approach works very well when you are going for conversions, right? Getting somebody to call you and say, hey, I'm interested in this price that I saw in this ad. And I think that's great. I'm not saying immediately blow up that, ad and then do something else with it. What I don't like is any marketing that solely sort of makes a promise based on low price, that has that as the primary reason to do business, because competitive prices, I think, kind of take stakes, right? People expect that your price is going to be competitive, right? So unless you can always deliver rock bottom, it's not a big differentiator. And if those are the people you're trying to get to switch to you, they're likely to switch out when the next guy has a special deal, for heating season and so forth, right? So I don't love putting all the eggs into the basket of, we're a low-cost provider. I think there always has to be some kind of long-term value proposition in the total mix of the marketing that you put out there, right? So think about the kinds of buyers that you're selling to, right? Here's a possible transitional family, a young couple, probably a millennial buyer. They seem to be showing some indication of being favorable for, towards rural property. What kind of approaching what kind of marketing approach would you take to connect with these kinds of people, right? It wouldn't be just be price. You know that. The conversation wouldn't just be about price, right? It would have to make some sort of connection with these people at a gut level that kind of makes them feel good about having the propane tank in the yard and having those kinds of appliances and getting more of the appliances in the home on propane. That's kind of a larger picture story that I think you should tell in your marketing. By the way, I saw this point of data from the National Association of Realtors showing that the average age of a vacation home buyer dropped to 43, right? So it used to be the 60-year-olds, right, like a decade ago, that were buying vacation homes because they're getting ready to retire, or, empty nesters and so on and so forth. But that average age is now at 43, which means that they're like 30-year-olds buying vacation homes. There are millennial buyers who are buying a vacation home while still renting in their primary residence, right? So I think we could all kind of stand to think about and potentially make a mental adjustment about, what kind of buyer we're talking about when we approach these kinds of people. This is a page from the market analysis section of your report for Roanoke. And you know how these go, right? So using the same consumer segments, the 3 targets, and then these are our sort of same, red is great, blue is not great, scores for way of scoring different media channels that would be available to you to advertise in. And so, there's some zeros in there. And then I saw one like the Sportsman channel, which if you had to pick one out of the list, right, that would be the one because it has high scores and it's got high scores for all 3 segments, right? So that's a real simple way to apply this reporting in this table in the report, right? And here's a Sportsman channel, right? A pretty rural audience, I think probably lines up with the consumer definitions that we were just talking about. Okay, Columbia, South Carolina. Let's do it. Unemployment here is a little bit higher than the average. Something happened in Colombia that had the numbers kind of tick back up towards the end of last year. So, whereas the rest of the country, including Roanoke, continues to see this go down below 4%, it did not happen for Colombia. Similar makeup of industries to Roanoke, a little bit more professional and financial services in there, but there's a lot of food service, education services. That's good. That's sort of a decent middle income. Those are teachers, college professors, and so forth. So that's good. Here's that same healthcare and social assistance, daycare workers and social workers and so forth that we saw in the Roanoke chart. So the makeup's, I think, a little bit more favorable than Roanoke. And median household income 42, which is a lot less than the national average, and less than the rest of South Carolina too. Median home price also, less than both averages. All right, so the makeup is great, but between this and these numbers, probably not to be considered at a macro level to be a growth market versus other markets in the country. There are more homes being built and sold though, right? So total size of the economy is pretty good. It's about 10 times more than we saw than in Roanoke. And you can see that playing out here too, right? Mungo, D.R. Horton, NVR, those are all, national builders. None of those guys were really in the propane areas. There weren't a lot of builders, frankly, new homes being built in the propane areas of Colombia. So I think, most of your play is going to be with existing propane owners and sort of getting them to buy more and converting, from electricity and other fuel sources to propane. Job growth is on the upswing. Same for permit issuance. Market strengths are around manufacturing, and affordability is really good in the area. Demographic trends look good. I think that unemployment rate can continue to go down or start to go back down again, be more in line with the rest of the country. So, not great, but this is why we're, this is what it looks like when you're not looking at San Francisco or Austin, Texas. All right, propane scores. So propane index score is a 109, right, which is right below the national average of 113. Remember, that's the combined score that sort of has to do with distance from natural gas and preference for propane, and if there's propane in the home already. Growth index, pretty good, 68, right, outpacing the average for the rest of the country. Demand index also strong. Right, these are the makeup of these folks in the market. So there are a lot of them, right, which makes demand high. And so based on those sub-factors, we're looking at an 87 versus a 71, which puts it at 36th. So right below Roanoke from a composite index score perspective. The heat map shows that the majority of those high scoring values are coming from the Richland and Kershaw counties. Richland here, Kershaw here, in the northeast part of the MSA. Some red zones in southwest Lexington when you get way out there to the border of the MSA. Right? The Columbia metro area is going to be pretty blue, as far as propane goes. So it's that familiar, what I've been calling the reverse bullseye, right, where the target is on the outside, not in the middle. Some action in Calhoun County as well. Okay. Just wanted to make sure I say this at one point. The heat map page in your report will always show a little bit more than the MSA, right? So you see those like dashed lines right here, right? So that's outside the MSA, but we'll still show you, the heat map score, the color code for those areas, right? It's technically, the border of the Columbia MSA is right here in this dark line, right? So it's just a little bit of bonus data that you guys are getting. If you are focused on that area, let me know. I mean, we still have the numbers. They don't go into the reports themselves, and you don't see them in the tables because it's not the MSA technically. But if you're interested in Clarendon County, for instance, let me know. I'd be happy to share those numbers with you because we do have them. The top-rated zip in the market is south of Lake Waterley in a town called Lugoff. I hope I'm pronouncing that right. This is the Lake Wateree, and here's Lugoff. Here's the table. Number 2, Elgin, is the town over from Lugoff in the same direction, and it's a very similar makeup. And they can both be treated in pretty much the same way, I think. I mean, look at it. It's similar size, a little bit bigger, equal representation of the target households, only 8K distance in median income, right? And similar scores that make it, high scoring on the composite ranking. I would be careful of 29223 Columbia right here, number 4, right? High demand index score is what's driving it up on the table. See it? 100? Right? But I bet you there are parts of this zip code that are on natural gas already, right? Which is why this propane share index is probably really low, right? So it's like almost a false positive when you're looking at just the composite ranking, right? It's good on paper, but if we were thinking about Columbia in a zip code versus zip code way, I would doubt 29223 is going to be a good opportunity for you, right? Look for the ones that score kind of well across the board to get that composite index high score, as opposed to ones like Columbia where, it's really high in one and then kind of low and medium in the others, and that's how it got on the chart. Like I said, even mix across the board from a target household perspective. It's a diverse group. They all want the basics, right? They all want a good rate. But they, all want something more too, right? From their energy provider. So what is that? What is that more that you're going to be able to promise them? And I thought about that quite a bit. I felt like, geez, I think about ads, or I talk to you guys about ads a lot. Some of it is out of necessity, because everybody's doing some degree of advertising. So it's easy for me to just Google some, online search for ads for propane companies and say, hey, is this something like what you're doing? And it's an easy example that I have a lot, that I have access to. But I want to make sure that we are not just applying the learnings that we try to share with you on these webinars on your advertising, right? Advertising is one, element of marketing. And you can't just put ads out there and say, I've done my marketing, right? There are very, complex ways of getting into a question about, well, what other kind of marketing is there? What other kinds of marketing should I be thinking about? And the model that I like for thinking about and trying to answer that question is something like this. This is roughly called the, buyer's journey or customer's journey, purchase journey, right? And it's kind of a, marketing school 101 model. And, sometimes it's in this sort of double pyramid shape. Sometimes it's like lily pads and you go from, pad 1 to pad 20. Sometimes it's in 3 parts. Sometimes it's in 25 parts. And, they're all different, and some of them are needlessly complex. This one's sort of medium complexity, so I chose this one. And I like it because it separates, pre-purchase, that's the blue part, and then post-purchase, which is like about retention and loyalty and things like that, right? So when we share observations about consumer group makeup and, talk about kind of what kind of marketing you're going to do and what you're going to put in, a magazine or, what you're going to mail to these people and what you're going to put on your website. It's not meant to be just for the purposes of designing a better ad. It's about that overall marketing strategy. And, it's about how you construct an answer to this buyer's journey, right, that, your customers are going through, right? So, there's this pre-purchased area, right, that's a lot about education, right? So you could say, well, this is how this is how a home can be fueled by propane, right? It's not just your grill. It can be your water heating. It can be your fireplaces. Hey, did you know it could even be your, dryer? So that kind of education, that's before you're getting into any sort of talk about rates, right? Or, how often it'll be delivered and, et cetera. Like, that's just laying down the groundwork, right? So that's important. And research, right? Like, more and more people are doing their own research. Somebody just moves into the neighborhood and they see a tank and they're comparing you to the next guy, right? This is just kind of comparison research that everybody does. That leads quickly to evaluation. It's probably going to, read some customer reviews, go on your Facebook page and things like that, right? So these are all things that, are applications where applications will be found for the data that we share with you, right? So when I talk about ads, I just have to make sure that I'm not overemphasizing this, just the brand awareness engagement aspect of it. And maybe you have more of an ad down here too, right? The example that I showed you is like a real conversion-oriented, purchase-oriented ad. So maybe I should have put a second arrow here, right? But, my general point here is that there's a lot more to marketing than just an engagement ad, right? That quotes a price, right? Post-purchase, I think, is easily neglected. And that's important, right? Especially when you're in the propane industry and natural gas infrastructure is always growing, and you're always at the risk of losing a current customer just to a competing fuel source, or or heck to the other marketer down the street who's doing this smarter than you, right? So post-purchase, right, like making you the customer feel good about being a customer, right? Customer appreciation stuff. Whenever you see like a local community involvement, blood drive that's funded by so-and-so, or, ballpark, hot dog giveaway, or, Little League sponsorship, things like that. Like that's post-purchase stuff. And the way that you decide what a post-purchase marketing campaign would be, I mean, that you should draw from the consumer insights and the segment makeup and so forth, and that stuff too. Right, not just the ads. I would love it if you guys sent me examples of what you are doing down below in the customer's journey, like what kind of marketing you're doing. It might just be like a video that you have on your website that says, hey, this is the kind of company we are, and here's our owner, and here's our mascot, right? It could be just that sort of thing. Or it could be like really, feel good, humanistic, like, customer local appreciation things, right? Like, giving out iced tea on the street corner on a hot day, right? It could be anything like that. If you send me examples of those, I would love to hold them up and talk about them and try to map them here and have an opinion for you as to whether or not there's anything in the data that can be used to sharpen a campaign like that. Okay. Wow, I really did talk for almost a straight hour. Thanks for watching, listening. Hopefully the next one will go without any technical glitches, and you guys will be able to ask live questions. In the meanwhile, and once again, send your questions to this email address, and we'll talk to you soon.